life is not about money, but money is what makes a lot of things go around on a daily basis. And if you're your own business owner, if you run your own show, if you don't have the protection of working in an environment where if you're ill for a short period of time or even a longer period of time, they will either pay you or there are mechanisms to pay you, you're going to find yourself in serious, serious trouble. And therefore, to discuss that on the line with me is John Marsden, who is a director of Citadel Financial Protection. John, welcome to Chai FM.
Good. Hi, Avi. How are you?
Great. What on yourself?
Good.
Great. John, you're the Managing Director of Citadel Financial Protection. Let's get straight into it. The biggest challenge we have with a business owner or somebody who runs his own business is cash flow. At the end of the day, everybody wants to have the Rolls-Royce protection. They want to have everything in place. They want to make sure they're doing the right thing. But when cash is tight, sacrifices need to be made, and unfortunately insurance is one of the first things that get either bounced or put on the back burner. When it comes to running your own business, what are the crucial elements of insurance that someone should be aware of?
Avi, sorry.
Go ahead.
No, Avi, the crucial element of any of these discussions is understanding the value proposition of ensuring that the continuation of the business is stable in the event that the key person or even the owner of the business is unable to perform their normal functions for any period of time. And that's something that's often overlooked. You know, insurance, unfortunately, is always a grudge purchase because the outcome is never one that's a pleasant one to contemplate. So certainly, protecting your ability to continue the business is crucial.
You know, recently, about a year and a half ago, I was in Plet, and I just walked through the town on the one side after the fires had been through, and then I went, to visit a hotel that I'd been to a few times, and it just wasn't there. And driving through the grounds, if one can call them that, to the hotel, it looked like Armageddon. It looked like a nuclear reactor had exploded. And, insurance is absolutely crucial because if those buildings, apparently, a lot of those people insured them when they bought them. They insured them at the value that they purchased for them, which is often not the correct value because it's not the replacement value, and yet never updated it. So when disaster struck, they were wholly underinsured, and that caused chaos.
There are a number of elements to insurance. One obviously is the tangible elements that is the building and the equipment or the machinery that is necessary to run the business. It could be machinery, it could be computer equipment, it could be any number of things. And of course, if something happens as you're describing, then insurance is absolutely essential to make sure you can rebuild the business. In essence, the value of the property, the value of the equipment should and must be reviewed annually, as obviously property values go up, equipment values depreciate, but it's important to make sure that you've got that contingency that should anything unforeseen happen, there will be an interruption to the business, but what you have can be replaced at least.
Fantastic. John, sorry to cut you off there, but we've got a line that's not 100% perfect, and I want to call you back again. So if you don't mind, we're going to take a quick break. I'm going to try and reconnect with you because there's quite a lot to discuss. We'll be back with you in a moment. Welcome back to 101.9 Chai FM. It's exactly 40 minutes past 12. Thank you so much for joining us. If you've just tuned in, and if you were listening before, just to remind you that we're talking to John Marsden, who's the Managing Director of Citadel Financial Protection, and we're talking about the protection that a business owner needs in order to ensure the continuity of his business should something unforeseen happen. John, is the line clear for you?
It's a better line. Thank you.
Oh, wonderful. John, let's jump straight into it. Income protection. It's a term, funny enough, that is not really on the lips of every business owner. And my feeling is that it should be. It's probably one of the most important pieces of insurance, or one of the most important items on the insurance menu that a business owner can order. Talk us through what the nuts and bolts are, how it works, and why it's so important.
Avi, the main element of protecting income is clearly to ensure that the generation of earnings continues in the event of short-term or longer-term incapacity or disability. There are various kinds these days that become much more flexible, even to the extent that, for instance, someone in a professional practice may not be able to practice their design profession for even a week or 10 days. And if that's their only income, then the sickness benefit would be essential. For bigger businesses where there are other colleagues and associates and directors, the shorter term income protection can be actually sustained within the business. That's why companies, often have sick leave benefits or, waiting periods to offset the cost. But, if you're not able to earn an income, the business fails. Also to cover overheads for the business. Income protection plans, in the main, cover not only your personal income, but also the overheads and the costs of running a business. So, things like your rent, staff costs, etc., can be covered in that kind of product.
John, something I find that is often misunderstood is that people say, well, if I'm claiming, let's say I'm a physio, and I'm claiming from income protection because I had an accident or I broke my hand or a finger, do I have to shut my practice down, or can I get a locum in to continue my practice so that my clients don't disappear, and can I still claim the income at the same time?
Yes, you can. Bringing in a locum, bringing in somebody who is generating the income, you're still paying the overhead for that locum. They're generating the earnings out of the practice. So the business continuity is taken care of, but it doesn't. You still need to have your own earnings protected. And one of the things in a professional practice, such as the one you mentioned, they're usually cash practices. So if you're not generating earnings from your daily activity, your income ceases immediately. So it's essential to have something to replace that whilst you're getting better.
I've just seen it in my own practice. It's most probably the most fundamental cover. And funnily enough, a couple of years ago, it wasn't even punted. It wasn't sold. It's been around for a long time. If I remember correctly, I think Sage Life was one of the first companies to bring it out. I think it was called Income Replacement Protection or something like that. But it's become a lot more prevalent and a lot more popular right now. John, unfortunately, we are a little bit short on time, so let's move on to the next topic, and that's the topic of a buy and sell agreement. It's a term that's thrown around and bandied around, and often I think the shortcoming of it is that you can have the insurance in place, but number one, if they're not structured correctly, they sort of counterproductive, and number two, if there isn't a legal document to go with them, then they're sort of like a chair standing on three legs. Can you just unpack that for us?
Yes, the business continuity, when you're in partnership with one or more other entities with an interest of a financial nature in the business, is absolutely crucial. Mostly in the event of death or permanent disability, you want to be able to release the value of your shareholding in the business as soon as possible. And allow the other partners to be able to buy out your share. And that's quite key, because liquidity is a big issue, and you may not necessarily have the sufficient capital available to immediately pay out the other shareholders. The legal document that is so essential to back this all up is to ensure that legal agreement is in place, that the proceeds of an insurance policy are directly paid to the other shareholders so that they can buy out your share of the business, which means that you've got the cash flow for your family, etc., which could be crucial. Also, if the policies are not structured correctly in terms of who's actually paying the premiums, then the default is it becomes dutiable in your own estate, and you could be paying excessive amounts of estate duty, which otherwise wouldn't be necessary.
I find it such a simple thing. When you sit down with somebody who really understands buy and sell, and puts the contracts in place and goes through all, dots the I's and crosses the T's, so to speak. It all falls in place. But 99% of the structures that I've seen have got major holes in them because they just haven't been finished correctly, which actually in a way would cause a greater liability than had they not been there. So it's just quite important to go to the right person to get them done.
Yes, absolutely. A buy and sell agreement is a reasonably simple thing to structure, but to ensure that the legal contract is in place and that the policy is structured correctly in terms of who is the owner and who is the payer is absolutely essential. And for that, one should most definitely speak to an expert in the field. And this is different as well, of course, from what you might call a key person in a business. If you're in a business and you have somebody working for you who is essential to the functioning of your business, it's often important to ensure that person so that should anything happen to that individual, then the business has enough capital and money to search for somebody new and suffer any financial loss, to offset financial loss that might occur whilst we try to find that replacement person. So the two go hand in hand.
John, just before we get to Keyman, a question's just come up here on the screen. I'll just summarize it. Someone wants to know that they've been to two different financial advisors and they've been given different advice on the buy and sell. On the one buy and sell, they would advise not to put severe illness or what some companies call dread disease. And on the other policy, when they looked at the quote, they see it was there. With no proviso, that it should or shouldn't be there, but the default, if it's there, that it should be there. They're not quite sure what to do because the first advisor was adamant that they shouldn't put severe illness into the buy and sell contracts. What do you feel about that?
There's a number of different elements you can include in a buy and sell. Normally, it covers the eventuality of the death of a partner, a business partner, or the permanent disability of a partner. But in terms of the buy and sell, you can also include critical illness. But usually the purpose of the buy and sell is if the individual is permanently unable to participate in the business into the future. So, one needs to look at those circumstances. And then the other real issue is affordability. Critical illness cover is quite expensive. And there are limits to the sums assured under critical illness. So if a business is a fairly highly valued business, it's unlikely that you would be able to get tens of millions of cover for that kind of thing.
Fair enough, yes, and I think that's something that people forget. When people are starting out, I've got small or modest businesses, is that sometimes these policies can be for incredibly large numbers. I know a particular insurance company, not to mention any names, their results were somewhat mooted because of major claims that had to pay out, and some of those actually came from buy and sell agreements where a partner was killed over the festive period, and that triggered a large claim. Okay, let's go to key person insurance. So key person insurance, who owns that policy?
The business owns the policy, and the life assured, the beneficiary of the policy is the business, and that way that the person who's insured, this money doesn't fall into their estate, because the purpose of the cover is so that the business can offset unforeseen costs of replacing a particularly important individual within the business, whether that's to recruit and find, headhunt a suitable replacement person, or indeed to offset perhaps financial loss in the business for a short period of time.
Okay, and it's the most important thing is that it actually pays directly to the business, and it's not the life assured. For example, if I worked for you, and I was particularly useful in generating a certain amount of business, you would insure me. But then if I spilled coffee on your lap one day and I got fired, that policy could be cancelled by you because I actually have no hold on it whatsoever.
Yes, it's a policy that's owned by the business, and it's paid for by the business on the life of the employee, and in the event of either permanent disability or death of that employee, the proceeds of the policy pay to the business. So it's not part of the employee's estate.
John, sorry, just to take you back to buy and sell, someone's just sent through a question. The question goes like this. The partnership, I used to work for, had a buy and sell agreement, and I was the life assured, and my partner owned the policy on me. When I left the partnership, my ex-partner refused to cancel the policy and has kept it on my life. Is that allowed?
You'd have to demonstrate an insurable interest for the policy to be valid. It's not a common practice to randomly insure somebody else if there's no insurable interest. The fact that the policy was still in force and that the company wanted to keep it is unusual in the fact that there would be no real benefit for them in terms of that. But there's no negative that I could think of that would be on the life assured. The onus would be on the business then to demonstrate at the time of claim that there was an insurable interest.
Yeah, I suppose it's a bit of a strange one. Maybe his partners know something about his health that he doesn't know, and they're waiting for something to happen. Because that's the feeling I'm getting from the message that came through there. John, and then lastly, I remember, many years ago, an insurance person came to see us for short-term insurance, and I was a young financial director in a company, and I just got given this plethora of different of covers with every scary possible outcome that could happen. And after a couple of months, we sat down and we said, do we need all these things? Loss of document, loss of this, loss of that. And when we started culling all the little bits that we were paying, it was an exorbitant amount of money. We were lucky nothing happened once we sort of reduced it. But I've often thought back and thought, if something had happened, we were really clever to save a few rand in the event something went wrong.
If you're referring to short-term insurance,
yes,
normally, it's an affordability issue. The reality is there's virtually nothing you can't insure. So it's really a case of assessing between yourself and a proper advisor what is the most appropriate level of cover and the type of cover for your needs. The reality is the amount of different kinds of insurance you can have are so vast that you may not even have enough cash flow to cover every eventuality. So you've really got to be selective around what is practical and important, but not to be drawn into the folly of thinking that insurance is not required, that I'll self-insure, etc., because it only takes one catastrophe to bankrupt you for a relatively small premium on a monthly basis. There's too many examples that I could quote where people have decided that they can't afford to insure their home, for instance. I personally am aware of a few people that I've had dealings with where their home was burnt down and it wasn't insured, and therefore there is nothing. So there's no amount of self-insurance that that can cover replacing your home.
John, maybe if I can just add on that point, maybe to add insult to injury, it's one thing when you've cancelled your insurance, or maybe you were naive and didn't realize that you needed it, which is almost impossible because the banks almost demand it. But the worst scenario is when you have insurance on your home, you took it out when you took out your bond 15 years ago, you're incredibly proud of yourself that you've paid off your bond 5 years early, and then winter happens and a heater knocks over and a particular room in the house is gutted. And you're very chuffed because you've been paying this premium for insurance for 15 years. And then the assessor comes around and says, but you're totally underinsured. And you look at him with this look of absolute surprise, like, how on earth was I meant to know that I'm underinsured? And really what happens there is that they average the claim. And that is the most insulting thing, where you actually don't even get enough to repair the damage, and you've been paying the premiums. So am I right in saying that as important as getting the insurance and paying the premiums is to be absolutely certain that you've insured the right values? Absolutely.
The same applies. I've seen this with householders insurance. Usually, a type of any insurance, if it's on a property that's increasing in value, the insurer will do some kind of an annual escalation of the cover in line with property values. And they would also do a depreciation of a vehicle, for instance, so that the value of the vehicle is not is depreciating over time. But the consequence, of course, is you've got to realize that then you're not going to get a brand new vehicle if your vehicle is stolen or written off. Similarly, in income protection, it's equally important to keep the insurer aware that the cover is in line with your increasing income. So annual reviews are essential. A lot of companies these days, when you talk about paying premiums and never claiming, I always say that if you've paid premiums and you've never claimed, you should celebrate, because it means nothing's ever happened to you. And where companies these days offer cashback rewards, it's important to understand that those cashback rewards are usually included somewhere in the cost of your cover. It's a small investment that runs along the side of your policy normally. Those sorts of things, generally speaking, are there to try and offset that psychology of I'm paying all this money and I'm not getting any return for it. That's sort of the way they would build that in these days.
Yeah, I think it's quite important, exactly as you said, to make sure that you just sit down and you get someone who can advise you. And my 2 cents worth is that it's very easy to blame the financial planner or the consultant or Citadel when something goes wrong. But at the end of the day, you are the life assured and you are the policy owner. It's your responsibility to also pick up the phone should you be uncertain. And I hear it all the time. I've left messages, he never came back to me. Well, he is an individual, she is an individual, but they work and represent far bigger organizations. Go above them, go beyond them. It's your responsibility to make sure that things are up to date. And if you're not getting the service, go and find the service. It's as simple as that.
Absolutely. It goes both ways. A good financial advisor with a strong relationship will review, at least telephonically, annually, and make sure everything is satisfactory and in line. Often one finds that those annual reviews are postponed. But working with a reputable financial advisor or an advice firm is key to make sure that there is continuity of relationships. If your advisor retires or something happens to your advisor, who can actually take over and continue the relationship? And that's where Citadel, I think, prides itself in that we have a 97% client retention rate. And that's because we ensure that if anything happens in an advice relationship, somebody else understands and can pick up where we left off if something unforeseen happens.
John, on that note, if somebody wants to become part of that 98% retention rate, how do they get hold of you?
Sorry, could you repeat that? It's a very bad line again.
So if somebody wants to become a client of yours, someone wants to be in touch with you, what's the easiest way for someone to reach you?
The easiest way is to look us up on our website, citadel.co.za. We're under the banner of Citadel Wealth Management, so it would direct you to any element within Citadel, whether it's investment planning, insurance risk, life insurance, company benefits, etc. We also are a consulting firm that looks after companies and their employee benefits for retirement planning. So to look us up there, simply if you're unsure, a Google search will pick us up very quickly on our website.
And can someone ask for you directly?
They may, yes, they can. My email is johnm@citadel.co.za.
Fantastic. John, thank you so much for your time. Thank you for coming on to Chai FM. And I really encourage everybody to please be in touch with you. These things are important. Thanks for your time.
Thank you very much indeed for the opportunity.
Great. Thank you. That was John Marsden, who's the managing director of Citadel Financial Protection. Everything that we discussed today, income protection, buy and sell insurance, key man, business overhead protection, and all your short-term liabilities can all be taken care of at Citadel. And please do yourself a favor. It's one of these things that we we're just going to get to until something happens. It's one of those feelings that you might know that when you've done it, the sense of relief is tremendous. And when you've done it with somebody that you feel comfortable, and once you've done it and you know that it's done to the best of your ability within your budget, you will feel so much more at peace, because that's one nagging little thing out of the way. And just in case you thought you could relax, tax season is coming up next month. So get your insurance out of the way. Go and speak to your financial planner. Give John Marsden at Citadel a call, but make sure you get it done. And if nothing else, have a conversation. And just one thing to add into the mix: if you are a dentist or a doctor and you're working for yourself, please make sure that you take your wife, your partner, the person that you're going to leave behind with to the meeting, so that everybody's on the same page. I've had too many examples where people said to me during their lifetime, my wife, my girlfriend, my husband is not savvy, doesn't really know what's going on, so I'm not quite sure what I should do. And then the inevitable happens and nothing was done. No one's asking your partner to be financially savvy. What they are asking you to be is to be considerate, and make sure that you put the plans in place and there's someone to assist them, and that they're aware, should something happen, this is what I need to do. Please go have a look at, if you run your own business, simple things like if you've got a shop in a mall, the glass on the front of your store, check on your lease who has to insure that. Little things like that are important. Your PABX contract, the lady or the person who answers your phone, those people need to be paid whether you're there or not. So sit with your financial planner and get it done. And once again, thanks to Citadel for the sponsorship of the show. Please go along and have a look at their website, and everything you need is over there. Just to remind you, the guy's name was John Marsden, and he's the Managing Director of Citadel Financial Protection.